Hello and welcome to Getting Started with Technical Analysis Indicators on Divergences. My name is James Boyd. Barbara Armstrong normally teaches this session, but she is in the chat. So we're doing role reversal today. So I just read the pamphlet on divergences. I'm joking, okay? And so this topic is very near and dear to my heart. It's very applicable to where the current market is as well. So looking forward to this topic. So just real quick, good afternoon to you, Dom. Richard, welcome to you again. Will, aloha back to you. Good morning from the shadows of Pebble Beach, California. That's JC. Boy, that's a nice place. My goodness gracious. Tough life you're living. All right, a little fun there. Now, just real quick as we get started, remember Barbara and I and all of us coaches, we do post educational content on X. There's our handles there down at the bottom. Feel free to join us. Also, just real quick as we get started, quick reminder that this class is on a level of getting started. That's my favorite, okay? And so some people say, James, you talk fast. I don't feel like I talk fast. So I will focus on making sure that this class is on like a getting started level. We can all kind of grab that beginner to intermediate. Got some great examples that we're going to dive into here today and practice together. Now remember that the information here is provided for general informational purposes only. Options carry high level risk. We might look at those, probably look at stock examples unless you have questions on options. Also understand that the securities we talk about, we're going to demonstrate analysis and trading functionality. Also understand that Schwab does not recommend the use of technical analysis as a sole means of research. Technical analysis tends to be a starting point. It's not the end point typically. And also remember that paid money examples it will be done on the software application. Now, this is, so Barbara normally teaches this class. This is really the PowerPoints that actually she kind of put together here. And you're going to notice that each week she goes through a different lesson, just like if you're going to take a lesson on piano or whatever, etc. And what you're now going to notice is we are on lesson 9 of indicators divergences. Now, first off, if we were to say kind of like, what is the backdrop or the market conditions for divergences, it would really be when the VIX was probably above 18, okay? That's first. If the VIX, $VIX, is above 18, you have a lot of stocks below their moving averages, like we've seen. So you can look at one chart, $VIX, the higher that is, the greater the chance that lesson 9 is probably very applicable, okay? Now, when we talk about divergences, we'll talk about kind of what is a bullish divergence, what is a bearish divergence, etc. So we'll define these divergences, and then we're going to look at some example on the charts, kind of talk about kind of different examples of them, and then talk about example trades from that. Now, when we talk about, let's say, first off, the bullish MACD divergence, we're talking about the price up top and then the oscillator known as the MACD at the bottom, okay? Now, this is kind of funny. I'm dating myself, but people used to call me Mr. MACD. I love the MACD, okay? And the biggest thing you need to understand about the MACD, the reason why some people used to call me that is because I like to look at momentum. And the MACD is gauging the momentum. Now, when you look at the MACD, you're going to see that there's a setting on it. And this is very important we hit this right off the bat. The slower setting is a 12.26.9. This is slow. This is really for an investor that's probably doing more longer term, okay? In other words, to get a divergence, it's going to take longer time, longer days to show the signal. Now, so write down 12.26.9, slowest, okay? You're waiting more for confirmation there, and it's more for a longer term investor. 8.17.9, more intermediate setting, okay? 8.17.9, and a 6.13.9, that's more of a shorter term type of setting. In our examples that we'll talk about here today, we'll talk about really the MACD 6.13.9. Why? Because if we're a trader, when we have a smaller number, 6.13.9, compared to 1226.9, we're trying to actually have less days to actually get the signal, okay, is what we're trying to do. Now, you're going to see that when we talk about kind of what it is we're looking at, it says right here, it uses the distance between two moving averages to identify possible short-term changes in price momentum. Now, the red, selling momentum. When we say red, we're talking about down here. When we talk about, let's say, green, we're talking about buying momentum. The most confusing part about this is if it's lime green, it means A, we're above the zero line and the momentum is higher. If it's actually that darker green color, okay, that's actually the MACD is still above the zero line, but the momentum is falling from the previous day. Lime green, above the zero line, and the momentum up higher than the previous day. And then you can kind of figure it out with the red. Same idea, but just opposite. Now, the biggest actually thing is they call it the signal line. The signal line is really the zero, okay? Now, what you're now going to notice is if we take a look at, let's say, now this is, when we talk about a divergence, I just kind of talked about A, we're looking at the price in relationship to the oscillator. Now, just real quick, let's just hop in on a quick example, okay? Now, we'll come back to the slide in just a moment, but I'm going to use example given Gilead. Okay, now don't worry, there's plenty of examples we could pull from, okay? And why is that? Well, because if the VIX is higher than 18, many stocks are down. And if many stocks are down, then the oscillators are probably down and maybe trying to turn back up. Now, we need to really understand why this happens. Because if we don't understand it, probably not going to trade it. Now, so first off, let's kind of understand kind of the reaction here. Example, Gilead. So in the recent couple weeks, we saw really Gilead fall to the downside. Okay, price falls. Now, number one is when the price falls, right? The price doesn't tend to fall forever. And let's say the investors thought, hey, look, as the price falls down to support, some investors actually say, look, I want to maybe buy on the pullback. So that's number one. When the price falls down, buyers start stepping in and saying, look, I want to buy at what they think the support level could be. Now, that's number one. Buyers start to buy. The second thing is, if those investors who already own the stock, if those people have the stock and say, look, I sold some, but I'm not going to sell any more because I think the price is going to start to go back up, they stop selling, okay? And so number one, you have new buyers coming in to buy off a support level. Two, people have the position, maybe sold some, stop selling because they think, hey, this is where we could start to go back up. And the third is really if bears, people that think the price is going to go down, they might say, look, I'm not going to do a bearish trade here because I don't think it's going to go much lower than where we are now. This is the backdrop of what's happening. Okay, those three things. New buyers buying. Two, current holders, institutional investors, etc., saying, look, I actually, they stop selling. They might even start to buy more. And third, bearish traders say, I don't want to do it because I actually think the price could rebound back to the upside. Now, let's kind of show this. When we talk about a bullish MACD divergence, well, number one, you actually see where the prices fall into the downside. And what you're now going to notice on the bottom is, let's kind of show this, and I'll show you how to put this on and adjust this on your charts. So we are looking at the MACD histogram. Every bar, okay, represents a day of trading. Now, what you're now going to notice is there's the setting, 6-13-9. Now, we can actually go to this just real quick, the little test tube right there. That test tube is just where we say edit studies. If we click on where it says edit studies, we're now, if you said, I actually don't have this, how do I put this on? Well, just type in MACD histogram. Okay, there it is. And what you're now going to notice is, now there's two of them that I like. Okay, I like to use the MACD histogram, which I'm showing. Now, if we put that on, all we'd have to do is click on that and say add selected. Not that bad. Where does it go? Well, it goes over here on the right-hand side. And there's the MACD histogram. And now you're going to see that setting. If I go over to the settings gear, that icon right there, click on that. Now, let me ask you something. How many of you are shorter term? If you're short term, you're probably going to actually say, look, change that to 6, 13, 9. The default setting is, I believe, 8, 17, 9 when we pull up the default. Now, the other thing that what you're going to notice is here, it says the average type. Now, if you said, I don't even know what this means, don't worry. Hit the question mark. Hit the question mark. And if you said, well, what does that even mean? Well, hit the question mark. Well, the type of moving average to be used in the calculation. Simple is just like arithmetic. The average, it's not very sensitive. The exponential, okay, as you can probably think about, or weighted, it's going to be closer to the current price, less lagging. And if you looked at a whole, which is the one we kind of use quite a bit in different like moving averages, that is going to be like the fastest. Okay, so our example that I have here is it's exponential. If you wanted to, you could say, hey, what does it look like with whole? Well, look at it. Okay, now let's go click on OK, apply, and then OK. Now, if you said, could you send me this chart? Okay, yes. Let me send it to you real quick, and then we're going to talk about examples. But this is very important because you have to identify what you want. If you said, I'm more of an intermediate type of trader, you'd probably pick 8, 17, 9. If you said, I'm longer term, I don't look at charts very often, but when I do, I want confirmation. I'm okay with lagging, 12, 26, 9. Okay, now, the biggest thing is when you see divergence, okay? Now, I want to kind of I don't even want you to look at the price chart. So when you see divergence, what I want to be just in your mind is when you see this down here, you see this big drop down here. And let's just label this as number 1. Big drop. Now, remember we kind of talked about, so when selling pressure happens, right, they sell, sell, sell. And the momentum of selling is very hard. Why? Because people want to hurry and get out. Why? Well, because they're trying to take their money. They're trying to protect their capital. Okay? Now, if that stock goes down again, the people that maybe had those shares, they're already out. And so now all of a sudden when the stock maybe sells off again, there might not be the same ferocity of selling because, well, they think they're in the area of support. And those buyers might say, look, I don't want to sell because I think we're at support. And then all of a sudden, when we look at the difference in the MACD between number 1 and 2, 2 is not down as far as number 1. Who cares? Oh, don't say things like that. That hurt my feelings. When you see number 2 not down as far as number 1, the selling pressure is less. Now wait, the selling pressure is less. What does that tell us about maybe potential support? We could be near that support. And the third thing is we could be starting to see buyers stepping up to buy. So on the bottom, what is it going to look like? It kind of looks like a tilted up W. That's what it looks like on the MACD. What does it look like on the price graph? What it looks like on the price graph is where the price has made a low and then maybe another lower low. So classic bullish MACD divergence, price making lower lows, true. But when it makes its lower low, that MACD down at the bottom is not as low. And if it's not as low, this is where you start to get into diagonal breakouts, moving average crossovers, etc. Okay? So the pull, now by the way, in a broader scope, could this also be a bullish flag? Answer? Anybody know the answer to that? Could this be like the flag where we're starting to break out to the upside and everyone should be going absolutely yes? That's true. So if you said, James, I like to trade flags, then you probably really enjoy bullish MACD divergences. Now, does that mean every one of them works? No, but every trade that you get into is just a setup. Okay. Now, are there any questions with what we've talked about so far? Yeah. So some, remember, Barbara, she's a Canadian, and she calls it a fleek. Okay. Now, Barbara doesn't know that when people came for Halloween, I gave them at the door candy, but then gave them the Canadian flags or fleegs. And they kept wondering, why are you handing out Canadian fleegs? So I did try to help my local area. Anyway, so I don't have those fleegs anymore. Now, so here's the deal. Now, next time Barb comes to my house and does that again, I will let my guard dog, Jax, my 9-pound Yorkie dog, we'll see how fast Barb can run. Now, so here's the deal. So number one is when we talk about this, so we talked about kind of the setup. We talked about the psychology of it. We talked about what is the MACD actually telling us. Really the momentum of bullish pressure, momentum, or bearish pressure. We talk about the settings. Now, we've got to also ask the question, is it only applicable to a daily chart? No, it could be different time frames as well. Could be intraday, daily, weekly, monthly, quarterly, all of the above. Is it applicable just to stocks? No, absolutely not. It's applicable to all products that I could think of. Probably the only product I would think it's not really that applicable to is maybe like fixed income or something like that. Okay, I'd probably say less. But everything else, you'd probably say like oil, gold, silver, things like that. Currency, it's all stuff that you would see on those charts. So it's kind of nice you're learning something that could be used in different areas. Now, I want to kind of take, so let's say the investor decided, hey, James, I see a stock that's falling down and I really got 2 touches at support. Now, Barbara has taught us so well about bottoms. Now, when I see bottoms, I like to circle those bottoms, okay? And then what I like to do from there is really identify where do we see that support. Now, remember what I said, if we start to see that MACD go above the 0 line. Now, what is the 0 line? Well, the 0 line, think of it as the equator, okay? Now, we have not gone green yet, but if we start to, let's say a moving average crossover, we start to make a short-term higher high, all of a sudden that actually MACD could go to 0. Does the investor have to wait to that for that MACD to go to 0? The answer is no, okay? They might say, I'm just going to trade the signal based upon the diagonal breakout, the moving average crossover. So the backdrop is I see a divergence on the oscillator. Second, if you do, that probably tells us when we look at the price graph, we see a support level. A bullish investor, that's what they want to see, a support level. So if they get in, they know where they can actually say, where am I going to get out if I'm wrong? Okay. Now, in this example, let's show a stop trade on this where the investor decides, hey, look, I want to put in a bullish trade. I'm going to right click on this price graph. I'm going to go down to buy custom and go to with OCO bracket. So right click on the chart. Okay. We get a menu, buy custom. And then it says, you want to do like a bracket order with a stop or a stop limit. We're going to say with a bracket. Now, if I decided, hey, you know what? I want to actually set a target that if we just swung back to the prior high, I'm going to try to get out. Now, who does that? Swing traders. Some people call them swing traders. Well, if we did that, that's going to be about 156. Now, I'm not saying that's the only target. I'm just saying that's the prior high. The second is if we actually said, where do we see that support? About 143.50. 143.50 is going to be about, well, less 2%. Stop 140.63. All right. Now, 140.63. So if I went dated GTC for good till canceled, that's what it would look like. Okay. Now let me show you another example that is like classic of this, where sometimes that entry maybe gets shaken a little bit. The example that so the first trade that we're doing here today, based upon a divergence, bullish divergence, is Gilead. Okay. Now, the second example I want to go back to that we've talked about, but I think that would be a nice learning lesson, is on Intel. Now, I don't know about you, but historically, sometimes when I've looked at getting into trades, you see a setup, you get in, and you're thinking, man, I hope this one goes up. But then sometimes it doesn't do in the short term what you thought it could do. Now, if we take a look at this, I want us to kind of look and see what we have here in this example. So first off, on Intel, okay, the price has actually gone down. So that's what we need first, price to actually go down. So there's a low. I'll put L for low. And then we actually went down again, and we made another low. Now, if you look at the L and just go down to the histogram, I'm just going to circle where that L was. The MACD was actually down farther. But when we actually made a new low, the MACD was not down as far. Now, you know immediately where we're going now. Well, the difference is here is that the MACD on the right-hand side on that last bar, it went green. So let's say the investor says, look, I got in, and they said, look, what I'm going to do is I'm going to set my stop below that, let's say, 43 and change level. So in other words, they're taking 43 less 2 to 3%. Does a divergence mean that it's going to stop on a dime and stop going down? Let me show you. So sometimes when you get the divergence, it just means that you could be in the area of support. Example given with kind of some of the stuff, geopolitical, whatever you want to talk about, fiasco, all the above. With some of that, remember we said when you see a divergence, you could be in the area where it's kind of consolidating and making the support level. So with that news, which can cause extra volatility, we went down to that 43 area again. We see what type of candle, which Barb taught us, bullish engulfing. And then all of a sudden, you actually look at that and you see a pop to the upside. So what would that have done really on 3.9? It would have tested your support depending upon where you saw support, how far below that did you set a stop, and so on. And then now you're seeing that stock go to the upside. Can news actually cause that to kind of gyrate, maybe test that support over again? Yes. Okay. So that's why, be very careful about setting stops too tight. Okay. And now if we actually go forward, you're going to see that's where it's at. Okay. Now, the biggest actually thing is this might blow your mind, but just put it in the back pocket. Some people that buy stocks, they don't set stops. Okay. Now, that shouldn't surprise you if you ask a coworker at work and said, with stocks that are in your retirement, et cetera, whatever you do you set stops on them? I think many people might even say, I don't even know what that is. They buy and hold. They're trying to get allocation to certain things and buy and hold, okay? Some traders, who does stops? Probably traders, stock traders. Those who are, let's say, stock and options traders might say, look, I don't do stops. I buy and buy a put, or I buy and I collar it. So some people, it's not everyone's doing the exact same risk management method. You could play bullish and have different ways to account for risk. So that's important. So not everyone sets a stop. Now, what I want to do is I want to kind of go back to just real quick the slides. So now, by the way, let's go back to this for just a second. On Intel, remember when I kind of talked about really a moving average crossover, okay? So on a stock like this, if this stock goes up and in the shorter term, if that stock goes up and really makes a brand new high, this could be what technicians call a diagonal breakout. So what you're now going to notice is if I go back to where we were yesterday, 2 days ago, and so on, and I go back, you're going to see that we're kind of touching a couple of these tops in a row. Now, all of a sudden, if we start to break out to the upside, there's what's called horizontal breakouts, which Barb has taught us. but she's also taught us about diagonal breakouts. If you think about it, a diagonal breakout is just a bullish flag. Okay, are we good? Okay, it's just a bullish flag. There was this one guy that told me he loved flags, but then he says he doesn't like diagonal breakouts. I said, you don't even understand what you're saying. If you like bull flags, then you would love bullish divergences and you would love diagonal breakouts. And I showed him and he goes, man, I never thought of it like that. So the biggest thing is we need an appreciation that when those stocks pull back, that is the flag. That's the pullback and consolidation. The pullback and consolidation then leads to the bullish divergence. The bullish divergence then leads to the potential breakout. That breakout could actually be a diagonal breakout, and if it goes up enough, it might even be a crossover. And when you zoom back, you're like, wow, we were in a flag, but now I see how the flag shows the bigger picture of where the pole is and how to put the target on. So it's just where we are in that process of an upward trend, okay? Now, if we take a look at this, so if I said, hey, we're gonna take a position on Intel, second example. If we did this in the paid money account and said, look, we're gonna buy the shares of Intel. Well, if we buy those shares of Intel and I type in INTC, if we did that, what I'm gonna do is I'm gonna, again, right click on the chart. If we right click on the chart, we get a menu. And that menu in this case is we're gonna buy the shares of the stock. Come down to buy custom. If I wanna put a target on it, I could. And if we did that, I'm gonna put the target at the prior high. Now, those who like to do swing trades, they might really like divergences. A, because they're trying to buy close to support. Two, they're actually trying to buy close to support or the breakout and then get the stock to run back to the prior high. Now, if we said, well, where do we see the support level? Same white line we've been working on, 43 and change. Anything less than $50, we'd use the example of less than 3%, 43.36, less 3%, and that's going to give us 42.05. Now, 42.05, we're going to type that in right there, and there's our second example. So the first example was Gilead. Second example is Intel. Now, so how do we find these? I mean, that's the question, right? Well, remember I kind of said to you an example of, well, you need stocks that have pulled back. So when you see stocks that are pulling back, number one, you can visually see them by stocks that are in what I call trend one. Trend one is just a term for the stock is below both moving averages. That's not that complicated, okay? This is beginner, okay? Stock below both moving averages. Now, when you say both moving averages, like what moving averages are you talking about? Well, the moving averages that I'm talking about is your classic, like 30-day moving average, which is the red line on the chart. And the blue line, the light blue line, is just really showing us the 10-period moving average. I mean, this is a 30-day simple moving average. That's just your gauge for trend, okay? The blue line, gauge for momentum. A visual way to see what might have a divergence is if the price is below both, which Intel has been the last couple days. If those color of the candles are red, there could be a good chance that you might be seeing a divergence. If you do not have this chart, I want you to have it, and it's a gift from me to you, okay? Now, if you said, well, James, you're telling me I got to pull up each stock. If I pulled up like a stock like AMAT, notice what happened in the last 2 days. Now, I want to kind of talk about what happens in reality. Are we saying that every time the stock pulls back, are we saying that every time that there's going to be a visible bullish divergence? The answer is no. Sometimes you just get a pullback. There's a red candles on the chart because the price got down below both moving averages. But sometimes that pullback doesn't last very long, okay? And all of a sudden, if we look on the MACD, it's just down. We don't really see that like tilted up W. Now, if I go forward just one day at a time, there's the next one, there's the next one, we don't really have a divergence. This is just your classic MACD is rotating back up. We don't see a divergence. So look at this example number one and look at your more classic divergence like this right there. Come back up, drop back down, and then come back up. That's what I mean by that tilted up W, right? Right here, that's not a tilted up W. That's just kind of more like a U. It's rotating back up. Someone who is trading a divergence, they're looking for that little tilted up. So in this case, if you go up and look at the price when the MACD is not down as far, there's where the price was. Now, that stock breaks back to the upside and so on. That's what the investor was looking for, okay? Now, so that's number one. I visually look at the chart. If I see red candles on the chart, I'm looking down at the bottom and see, can I see something that looks like this? Now, if you said, for the love of Pete, ain't no way I'm looking at all those, okay? The other way we could actually do it is if I went to, let's say, the market watch. And if I went to the market watch and now, by the way, if we said number one, would we look at the indexes and see what type of trends they are in? Might that tell us what list could have bullish divergences? And the answer is no. No. Yes. Okay, I just want to make sure you're listening. For sure. Now, but wonder if you said, I got a list of sectors, and I'm looking at, let's say, example, I want to see, let's say, stocks that could be doing bullish divergences that could be near support. Well, if I brought up a list of sectors and said, what type of trends are we looking for to see divergences? I already said it. You'd be looking at the ones. Now, what would maybe tell us that maybe that divergence is starting to kind of push back more to the upside? Okay, we could tell you it's number two. Because really, number two is where the price was below the moving averages, but now the price has gotten back up above that shorter term moving average. So one is that the price is still down, but that two is actually telling us, look, we're down, but we're starting to bob back up. Now that could be that sideways, that tilted up W that we've been talking about on the chart. Now, by the way, so when we look at number two, what is that? Simple. Price above 10. What's the purpose of the 10? To track momentum. Now, but it's not, okay, above the 30. It's not. So it's just saying, hey, the momentum is coming back up, but we're not above the 30 yet. Could we? Yeah, it could. If we actually start to see, let's say, number three, that's what 3 is telling us. 3 is telling us the price, P for price is above the 10 and the 30. So whether we look at them on a visual chart or we look at them on a list, that's how we could cherry pick those and say which ones are probably showing us divergences. The ones that are still beaten down pretty hard, 1. They haven't probably turned maybe yet. They're early. Well, why does someone want to see the early ones? Because they start watching them. 2 tells us they've started to turn more. And 3, they've been turning back to the upside. Now, if you said, James, I actually don't have this, and I would like this. Sure. Okay. Look, just ask and you shall receive. Okay. ASK. So the biggest actually thing is if we went back and said, well, let me share this with you just real quick, pull this up, pull that up right there. How do we put that on the list? Now, by the way, what's nice about this is we could take any list of stocks and it's just going to run them through the filter. The filter is just saying, the filter is where's the price in relationship to the moving averages? That's what the filter is. And that filter we call, what is the trend? Since we're talking about divergences, we're saying, where am I likely going to see the divergences? Anything, one means you're probably early, you could start to see it. Two actually tells us it's likely to be seen. And three is telling us it has probably, it's in the process of happening and it's gone up further. So when you look at examples like gold, when you look at examples of semis or tech, those are the ones that are actually getting a little bit more of a turn. Now, we could pull up, let's say, the list of, let's say, Dow stocks, a bigger list, same idea, and say if I looked at that on the trend column, as this loads here, you're now going to see that if I said, okay, which one of these could actually really be in maybe a 2 or 3? If someone said, I would like a greater chance of finding one that is more divergence, it's probably 2s. You got to understand something. 2s don't tend to last as long because people have been trying to, or they're trying to, or have been getting in. And if enough people get in, it pushes the price up above both moving averages and you shift to a 3. Okay. Now, let me look at this last one just real quick. Okay. So, and I just want to kind of fast fire through a couple. So the example was on this market watch. So what I sent to you in the chat, let me send it to you again. Okay. There it is. There. How do you put that on the list? If we go to setup, top right, open shared item. If we click on open shared item, that's not too bad. I mean, just go to the setup. It doesn't matter. We could be in Naples, Italy. Okay. Anybody knows that if you click on the gear, it's the settings. You don't need to speak English. Okay. We can speak Italian for crying out loud. If I click on the setup, go to open shared item, we know it's some type of setting. Let's click on it. There it is. Now, if I say just copy and paste that back in, let's preview that. What am I going to preview? Well, it's that column that I shared with you. When I preview it, click preview. Now what I'm going to do is I'm going to label this. Now, I'm going to, Wiley, you're going to be the example, okay? Wiley trend, okay? I just call it trend. I'm going to call it Wiley trend, okay? Now, if I do that and say import that, what is it importing? It's importing the script for that trend, for that column. If I click on now import, now this is classic computers, especially a PC. I saved it, now I can't find it. On any of these column headings, any of them, right click on any of the headings. It doesn't matter. Right click anywhere on the headings. Right click and now customize. If you right click on any of the headings, you are customizing what you want the columns to be. What do I want to see? I want to get to that trend column. What did we call the column? This is always the problem. I can't remember what I called it. Of course we do. Wiley trend. Now, if we do that, I could search for it because I remember. Okay. Wiley trend. And now if I click on that, I add it. And now what you're now going to see is Wiley trend is going to be right there. Wiley trend is at the bottom of the list because it's going to tell us that Wiley trend is going to be over here on the right-hand side. Can we move those around? You better believe you can. Just click on them and drag and you can move them left or right and so on. Okay? So I just want to explain to you how you put that on. Because if we talked about divergences and you said, I don't even know how to find them, that would just make me so sad. So that trend column, whether you look at it on a chart or whether you look on a list, that's a way to kind of get the faster mode of how to find the things that you're looking for. Okay? Okay. Okay. Now, the question now. Okay, I got that question. The question was asked. Okay, so let me just show this just real quick. So sometimes we say this: subscribe to the Trader Talks channel on YouTube. One of the reasons why you want to do it, one of them, is when you subscribe for free, you're going to see that there's a little search icon. Now, if I clicked on this, that search, it's going to go on our YouTube page, anything that we've taught, and it's going to search for it. So if you said, the question was in the chat, please send a link for James's webcast that explains all of his screen. Now, there was a class, I just called it, I believe, Trader Dashboard. Okay. Now, this is not really the only one, but I think if you look at this, one of them that I did was called Identifying Market Trends with Candles. Okay. That would be one. Again, there's not the only one. There's been multiple classes that people have taught over time that have been on it. But if I said one that we've used for a long time, that would be one. Okay. Now, if I pull this up just real quick, let me go back to this. That would be another place right there. Okay. So make sure if you're not used to that, you can, for example, right there, click on the little icon right there and then search for what you're looking for. You can even type in the word scripts. You type in the word scripts, you can actually see other ones, 7 key scripts that investors should know about. And honestly, even that one right there, that's one that's kind of more recent. So I would get used to using that icon a lot. Okay. Now, in closing, okay, there is a survey in the chat. It's 2 questions. Click on that, and thank you in advance for filling that out. That is a way that we can read your feedback, and a lot of times that it provides nuggets for what we actually teach in our future classes. Now, the other ones I'm just going to make mention of, okay? If we look at, let's say, stocks, and I'm going to use the example, we said AMAT, we said Intel, we said Gilead. I'm also going to say, if I also pulled up examples, like Merck, okay? If you look at an example like Merck, just because the stock, let's say where the MACD, we don't see a bullish MACD divergence yet, it doesn't mean that it can't start to carve one. So if you see where the MACD is down, like it is, and you see the price down near support, horizontal or diagonal, the likelihood of maybe that it could start to form the divergence could become extremely high. Okay. So just understand that if we're down near support, think through that psychology. If we're down near support, buyers could start to buy, causing that MACD, bearish momentum, to start to turn back up. Second, those who have sold might stop selling, causing that MACD to turn back up. And third, those who like to do bearish trades, I know some of you are out there, you might say, most traders might say, I don't want to do a bearish trade because I think the price could bounce back up here. Okay. So 3 things that can cause that stock to start to get a divergence. So when you see something like this, don't think all is lost and there's no divergence. Understand the psychology and what could cause that divergence. That's very important as well. Don't just be looking at like, oh, this is divergent. Think what could be starting to have a divergence based upon the price near support. All right. Now, Barbara is going to be back next week. And so she allowed me to teach in her stead here today. Hopefully, I've kept this train on the tracks. Barbara, what say you? And so I want to thank you so much. I want you to go out and kind of practice putting that trend on the chart, put the trend actually on the market watch. As you find bullish MACD divergences, send them to James Boyd at Schwab, my email. Okay, joking. That way I can look at those as well, and I appreciate that. Okay, a little fun with you. I just want to make sure you're listening. And all right. And so with that said, I want to say thanks so much for this topic as we've really talked about bullish MACD divergences. Now remember, Barbara, most likely, check me on this, Barbara. This is a rotation of lessons, and those lessons are still applicable even though you've seen them before because it's at different markets sometimes. And so it allows you each time as you go through the lessons that you learn. Now remember with what we discussed, it's done for example, illustrative purposes only. Stay tuned for our next webcast right at the top of the hour. Thank you in advance for filling out the survey. And don't forget to subscribe to the Trader Talks channel right on YouTube. With that said, thank you so much. Take care and have a great day. Bye-bye.